So let's begin with the introduction to accounting. Can anyone tell me what do we mean by accounting? Just a general term. The basic thing when you hear the term accounting. It's an open class and it's a free class, and I welcome the wrong answers too. So, when we talk about the term accounting, accounting is the process of recording financial transactions pertaining to a business, right? So, whatever transactions are there in the business, any basic transaction which is related to finance, which is related to the operations of the business, and we have to account them for, is called accounting. For example, I am having a soaps business and I'm buying my raw materials. I need to account how much raw material I'm buying. So that includes a part of accounting. So it's the process of recording financial transactions pertaining to the business. Non-financial transactions does not take place, but yes, there are accounting principles which take into account certain things which also consider the non-financial, that we'll talk about later. But our focus is on financial transactions, and the accounting process includes summarizing, analyzing, and reporting these transactions to oversight agencies, regulators, and tax collection entities. So we need to do accounting first of all for the business, and secondly, we know that we need to submit these reports to the government, to the tax authorities, so that taxes accounted time to time. Now, these, whatever we are doing, whatever we are recording, analyzing, and interpreting the results thereof, they are done in the form of certain statements. Those statements are called financial statements. They are used in accounting and are a concise summary of financial transactions over an accounting period, summarizing a company's operations and financial position and cash flows. So basically, whatever we are recording, summarizing, analyzing, we do it in the form of financial statements. You must have heard the term key. If you want to see how the company is progressing, just look upon the financial statements. And the financial statements include, the main two important statements are profit and loss statement and balance sheet, right? So we can generalize the term accounting as basically recording, analyzing, and classifying the financial transactions. Now, what are the objectives of accounting? Number one, to keep systematic records. Because if we are running a business, if we are running an entity, we need to have records. Where the money has come from, where the money is going. What are the sources? What are the outgoing things of money? Where the money is being spent. Second is performance evaluation. If we are not accounting of financial transactions, we have no record how much we are growing. We can compare our financial statements from year to year to check upon the profits, the losses, the growth, the debt equity ratio, how much debt the company had last year, how much the company is having debt this year, is it equity based company, is it debt based company. So all these comes as a part of accounting, and it should be done for performance evaluation. Now, next is ascertain the financial position. Now, it's somewhat kind of linked, the second and third point. Obviously, we are evaluating performance over the quarters, over 6 monthly, over the years. And then obviously, when we are evaluating the performance, we are obviously ascertaining the financial position, what and where our company stands, right? Facilitate decision making. Now, if I want to, like, I'm again talking about some soap business, and suppose I'm only selling rose soaps, and I want to add a new line, like line of shampoos maybe. So I need to decide that whether my business has enough scope in the market, whether my shampoos will be demanded. So it depends upon the profits I have, the demand of the market, the spread in my area. Accordingly, I will facilitate, I will take my decisions. So accounting, these records, these financial statements helps in taking the decisions, right? So there is a facilitation in decision making. These are the main objectives of accounting, that why we should do the accounting. Now, There are certain approaches to accounting theory. Approaches to accounting theory means that with what perspective we are seeing the accounting theory. Number one, normative approach. Number two, positive approach. Number three, critical approach. Now, what is normative approach? When I say the normative method aims to create accounting principles and regulations based on moral and ethical issues. Additionally, it highlights the need for sound judgment and the necessity for accountants to act for the public good. So, when I'm doing the accounting, basically the chartered accountants do the accounting thing. So, what approach he should perform the accounting techniques? Is his approach is normative, positive, or critical? I would say it is blend of three of them, but these three approaches have different values. Normative approach means that when you're performing the accounts, you have to follow the accounting principles. Normal. Normations should be. The norms should be followed. Up to date norms, up to date accounting principles should be followed by a chartered accounting, by the accounting professionals to do the accounting, to record the transactions while doing the recording of transactions. So, normative approach, I repeat, it aims to create accounting principles and regulations based on moral and ethical issues. And obviously, we should think from the public point of view that while we are recording, we should do no harm to the society, right? So our accounting principles should be in favor of society for the public good. Now, what is positive approach? How accounting is actually done in practice. It is predicated on the notion that accounting is a social discipline that is influenced by the goals and principles of different stakeholders, such as managers, investors, regulators, and accountants themselves. See, when the financial statements are maintained, now these balance sheets, these profit and loss account, not only one person, but there are many people who are interested in these statements. And who are these people? These, the one I have highlighted, the stakeholders, those who have invested in the company. Obviously, they are interested that how the company is growing, whether the company is earning profit in next year, whether we are going to receive dividends on time or not, whether we are getting our profits, whether our share value is increasing or not. So stakeholders are interested from that point of view. Why managers are interested? Managers want to see what is our growth in this company. If the company is growing, they are growing performance wise, right? Everyone wants to be associated with the growing company. No one wants to be associated with the falling company, right? So managers are interested in the financial statements too. Then investors. Obviously, investors want to see that when I am providing money to this company, is the company is able to utilize it properly? Will it generate sufficient profits to me? Right. So main motive is what they are earning from the company. Regulators like government authorities, they have separate special interests. Like they have to see that whether they are meeting corporate social responsibilities, whether they are behaving as per the economy, whether they are behaving for the good of the economy, right? So whether they are paying tax on time, right? So regulators, government authorities, tax authorities are interested in that way, and accountants are interested. Obviously, they have to see whether they are maintaining the accounts up to date according to the latest accounting principles, because there are audits in the company and they should not be judged upon. Right. So, what is positive approach? Now, I have just simply explained to you how and why these different parties are interested in accounting. Then only you can relate with this positive approach. Positive approach, I'll read again. How accounting is actually done in practice. Means this approach means ki actual mein how we are following. We normative approach says that yes, we should do this, we should follow accounting principles, we should do that, A, B, C, D. There are certain norms to be followed. But positive approach says what is being actually done while recording the financial transactions. Are we actually following the norm? Are we meeting these people's interests? these people who are interested in financial statements, क्या हम इनके हिसाब से accounts prepare कर रहे हैं, क्या हम इनके हिसाब से financial statements prepare कर रहे हैं, are we doing actually as per their interest? This is positive. So what is the difference between normative and positive? Normative says these are the norms should be followed while preparing the financial statements. Positive approach says these are the norms actually being followed. What is actually being done while recording the financial statements? So the positive approach aims to comprehend the variables that affect accounting practices and how accounting affects the behavior of various stakeholders. Right? The positive approach says, I'll repeat, aims to comprehend the variables that affect the accounting practices and how accounting affects the behavior of various stakeholders. Obviously, whatever financial statements we have in hand, accordingly, the stakeholders means all the parties who have certain stake in the company, they will change their decision. Right? So, stakeholders can include shareholders, not only shareholders but employee also, because certain employees also get shares, certain like bonus shares, so they are also having directly indirectly a part, a share in the company, right? Now, last approach is critical approach, right? The objective of critical approach is to promote more democratic and unrestricted form of accounting while exposing the biases and limitations of accounting methods. It is frequently linked to interpretive analysis and qualitative research techniques. So this says that when you're doing the accounts, you should do from the critical approach. For example, what is the critical approach? I'll give you one example, that we should consider more of our losses and less of our gains. Means the gains which are not predicted to be 100%, we should not estimate and record them. And the losses, the expenses, we should first record our expenses and losses, and we should least record our gains and profits. Those who are 100% for sure, don't know, those only should be recorded, right? So estimate all profits and losses accurately and consider more for the expenses. Means we should not be like कि हम थोड़े fake profits show कर रहे हैं कि इतना प्रॉफिट तो हमें आ ही जाएगा, इतने लॉसेस, हमारे लॉसेस कम है, हमारे एक्सपेंसेस कम है, बट हमारी इनकम ज्यादा है. When we are doing that, we are showing wrong prediction of our accounts.
No, ma'am, not clear for me because of I need more clarification because of the for the basic you are already explained now.
Yeah.
Okay, so normal accounting and positive account I understand, but critical approaching I have not understand because of the what is the different the both the things. So can if you explain again, so it's easy for
Yes,
me
yes,
also.
definitely, definitely. So critical approach means that we should be like more critical. We should be more, I would say cautious while recording the financial statements, right? When I am preparing my financial statement, when I have P&L in my hand, I am seeing that these are my expenses. For example, there are certain expenses. I'll give you one example that will be more clear to you.
Okay.
Advertisement expense. When I am spending on the advertisement campaign, I am not spending for one thing, like one go. I'm spending, for example, 1 lakh, and that is to be distributed for 5 years, right? कि 5 साल में
Yes, yes, yes.
advertisement campaign हम use करेंगे. We are given 5 advertisements for over the 5 years. So now my choice is that whether I should record uh, it's 5 years, 20,000 right now, and I'm ignoring those 20,000 for the next 4 years, or I'm recording 1 lakh right now. The critical aggressive approach of accounting says that record 1 lakh right now because you are spending 1 lakh in this year.
Yes,
But
yes.
the actual account says कि over the time हो रहा है, तो we can record over the time. Why we should? क्योंकि advertisement जो हम इस साल कर रहे हैं, इस साल जो हमें एडवर्टीजमेंट से गेन होगा वो रेवेन्यू वो 20,000 के अगेंस्ट ही होना चाहिए. अगला 20,000 तो हम अगले साल यूज कर रहे हैं, तो वो हमारे नेक्स्ट P&L में एक्सपेंस में 20,000 आना चाहिए. सो क्रिटिकल अप्रोच सेज नो, 1 lakh should be recorded right away because we have spent 1 lakh right now. and not spending over the time. We have paid. This is one of the example of critical approach. And another example can be, for example, we have furniture in our organization, and now we have two options: straight line method and written down value. I'm taking just these two basic methods for depreciation. There are two methods just for the basic information of everyone. I'm not aware how much you know. Straight line method means, for example, if the furniture value is 1 lakh, I'm taking the same value so that it is easy to record in mind. 1 lakh 5 year depreciation, 5 year value as furniture की, तो हर साल depreciation कितना आना चाहिए? 1 lakh divided by 5, assuming scrap value to be 0. So it is 20,000 depreciation per year. But is it actually the fact? Does depreciation have does depreciation speed is equal every year? No. Depreciation is most in the first year, then it slows down. अगर आप कार की भी अपने इंश्योरेंस उठा के देखोगे तो पहले साल में ज्यादा डिप्रिसिएशन लगता है, ओवर द टाइम कम लगता है.
हाँ.
व्हाई? बिकॉज दैट इज रिटन डाउन वैल्यू. इनिशियली वो ज्यादा यूज हो रही है और धीरे धीरे वो पुरानी हो रही है, तो उसका डिप्रिसिएशन भी स्लो हो रहा है. सो क्रिटिकल अप्रोच से अब हम क्या करते हैं अकाउंटेंट्स की, यार 1,20,000 करना हर साल 5 साल के लिए इजी है, 20,000 हर साल डाल दो डिप्रिसिएशन का. दैट इज नॉट अ क्रिटिकल अप्रोच. Why? Because in first year, what we are doing, if we are recording 20,000 as depreciation in our P&L account on debit side, what are we doing? We are estimating our profits high. जब हम expense कम record करेंगे तो मतलब हमारे profits और high हैं. तो we are not following the critical approach, right?
Yes.
अगर हम रिटर्न डाउन वैल्यू के हिसाब से जाते हैं तो रिटर्न डाउन वैल्यू के हिसाब से हो सकता है पहले साल डेप्रिसिएशन 30-35 हजार हो, राइट? और हमारा उस हिसाब से फिर प्रॉफिट कम होगा. जब डेप्रिसिएशन ज्यादा होगा ऑब्वियसली प्रॉफिट कंपैरेटिवली कम होगा, राइट? सो क्रिटिकल अप्रोच सेज एस्टिमेट योर लॉसेस एंड एक्सपेंसेस फर्स्ट, right? I will again read this critical approach. The objective of the critical approach is to promote more democratic and unrestricted forms of accounting while exposing the biases. Biasness नहीं होनी चाहिए accounting में, simplification नहीं होनी चाहिए. We should try to prepare accounts in such a way that they are representing the true figures of the organization.
यहाँ पे एक पॉइंट है, अगर डेप्रिसिएशन का अगर कोई भी डेफिनेशन है, जस्ट लाइक आप मान लीजिए फॉर एग्जांपल, आप जैसे एग्जांपल दिया आपने 1 लाख का, अगर हमने एडवर्टाइजमेंट के लिए 1 ईयर फर्स्ट ईयर में हमने कॉस्ट ठीक है, वो हमारे 5 ईयर के लिए हमारा वो ये है काम करेगा. उसमें कुछ रूल्स है जो इतना फर्स्ट ईयर में 35% या नेक्स्ट ईयर में 20% या इस हिसाब से कुछ रूल्स का ये है प्रावधान है.
या रिटर्न डाउन वैल्यू मेथड में कुछ परसेंटेजेस दी होती हैं कि फर्स्ट ईयर में इतना डेप्रिशिएट करो, सेकंड ईयर में इतना डेप्रिशिएट करो, मे बी 35%, डिपेंडिंग अपॉन व्हाट काइंड ऑफ असेट दैट इज.
ओके,
राइट? सो रिटर्न डाउन वैल्यू मेथड जब भी हम क्वेश्चंस करते हैं तो एक्चुअली में वो डेप्रिसिएशन परसेंटेज मेंशन्ड होती है.
ठीक है,
राइट? या ऑल गुड?
यस.
Yeah, so we are moving to the next slide. So these were the approaches to accounting theory. Now, what is the importance of principles of accounting? Let me just tell you that there are certain accounting principles, right, that are generally accepted accounting principles, also called as GAAP, GAAP, right, in capitals. These are the principles which create a basic, I'm saying the norms. These are the norms, these are the basics which guide you how to record the financial transaction, right? When I'm talking about depreciation, when I'm talking about my prepaid expenses, when I'm talking about my outstanding expenses, किसको record करना चाहिए, किसको कैसे set off करना चाहिए, these are guided by these principles of accounting. So what is the importance of these principles? Number one, accounting principles and concepts determine income, expenses. Income and expenses are, it should not be highlighted in same color, just as there's a problem in this thing. Income and assets should be green, expenses and liabilities should be red. So green means what is coming in the organization. Accounting principles and concepts determine income and expenses assets, and liabilities for financial reporting. So these principles act as the base for determining these four. Everything revolves, all the accounting statements, accounts revolve around these four terms. Second, companies implement these principles while preparing the financial statements to make them consistent and complete. So we use these accounting principles first to determine these: what are our incomes, what are our assets, what are our expenses, what are our liabilities. Now we will decide where we will record income and expenses and where we will record assets and liabilities. Assets and liabilities are recorded in balance sheet. Income and expenses, losses and profits are recorded in P&L account, trading and profit and loss account. Third point, these properly formulated financial statements help investors in analyzing useful information, right? So these obviously financial statements helps us in guiding how the company is progressing and so on. The decision making part is also dependent upon these financial statements. It becomes easier to compare financial information differently. Obviously, we can compare the quarter reports over the year reports, right? And over the decade reports. Hopefully, if the company grows so long, then through these principles, transparency in the system is increased and red flags can be identified. So, if you are following these principles, transparencies are more and we can have red flags that can be identified. Red flags means if there is any loophole or any misuse of the financial statements, right? That can also be identified. Now, these are the accounting principles we have. Let's read the term one by one. Accrual consistency principle, conservatism principle, cost principle, economic entity principle, matching principle, materiality principle, going concern, monetary unit, reliability, time period principle, revenue recognition principle, objectivity principle, full disclosure principle. So all these principles guide you in some way or the other how to record and what rules to follow. Let's begin with the first one, accrual principle. This is the most important and most basic principle that needs to be followed. Means it's like the hardcore part of the accounts. It is one of the important accounting concepts and principles that mandate the recording of transactions in the time period in which they occur. The thing which we were actually talking about in the example. It is regardless of the time when actual cash flows for the transactions are received. Most large scale business adopt an accrual system to determine the cash flow of the business operations, right? So accrual principle means whatever is due should be recorded at that time. If income is due in this year, it should be recorded in this year. If income is due in next year, though we have received in this year, it should be recorded in next year. That is the accrual principle. Let's talk about the example. What is accrued revenue and accrued expenses? When I say accrued revenue, it means if a company provides a service in 1 month but doesn't invoice the client until the next month, right? I'm repeating, if a company is providing the service in this month, but invoice nahi gaya until the next month, the company records the revenue as accrued in the month of the service provided. अगर मैंने जनवरी में सर्विस दी है और मैं बिल फरवरी या मार्च में दे रही हूँ तो मैं रिकॉर्ड इनकम जनवरी में ही करूँ क्योंकि मेरी ड्यू वो इनकम जनवरी में ही थी, right? So this is accrued thing. For example, if a consulting firm provides services in January but invoices the client in February, the firm records the revenue in January. So accrued means record when due, not when received. Record the transaction, the financial revenue when due and not when received. Accrued expenses, if a company receives a good or service but doesn't pay for it until later, the company records the expense as accrued. For example, if a caterer receives food from a supplier but doesn't pay the bill until later, the caterer records the food as an accrued expense. It goes the same way for the accrued expense. If I'm spending on something, maybe on raw materials in January, I have to record this expense in January itself, right? So whenever the expense is being incurred, whether paid or not, whenever it is being incurred, it should be recorded in that month. Same for the revenue. Whenever the income is due, it should be recorded in that month, not when received, right? Or not when paid in case of expenses. So this is a very simple but very basic and much more applied principle. I hope everyone is clear with this accrual principle. And moving forward, consistency principle. Now, what does the name says? To maintain the consistency in accounts. Let's see how it works. According to this principle, when an organization adopts a specific accounting method of reporting or documentation, then it should stay consistent with the method. Means if I'm preparing my trading account, my profit and loss account, first trading account is prepared. Trading account basically talks about the profit data from operations. We'll do it later, right? Then comes the profit and loss account, and then balance sheet is prepared. So if I'm preparing trading account and P&L account with certain accounting principles, I should follow the same principle while recording the transactions in my balance sheet, right? That it means that way. And also, it should be consistent not among the financial statements, it should be consistent over the time also. The aim of this basic accounting principle is to make financial statements comparable across industries and companies, right? अगर मैं एक क्वार्टर में ये प्रिंसिपल फॉलो करूँ, I have to follow same principle in next quarter over the years. That talks about the consistency principle. This principle has two issues associated with it. First, the principle is not properly followed when many people are recording data and compiling reports. To combat this issue, organizations need to have a set method internally, right? So that is a coordination problem, but obviously when there are too many people, it is very difficult to say that all should follow the same accounting principle, right? कईयों के कुछ थॉट्स होंगे कि ये प्रिंसिपल फॉलो कर लो, कईयों के कुछ थॉट्स होंगे कि नहीं, we should record depreciation like the case of depreciation. The second issue is related to switching between the financial reporting methods. Some organizations do this in order to manipulate the data to their advantage, right? So changing the financial reporting means following one accounting principle in one reporting and another accounting principle in another reporting will create a clash, and it will obviously lead to manipulation of the data, right? So we should avoid this inconsistency. We should follow the consistency principle so that there is no manipulation allowed, because change will inconsistency will be only there if the company wants to do something to its advantage, right? So that is consistency principle, means following same accounting principles while preparing the financial statements. It's simple. Let's come to the next third one, conservatism principle. According to this principle, one should recognize expenses and liabilities at the early stages, even if there is uncertainty about the outcome. So here we are talking about conservatism. We should, it's like key when I should be less open to my revenues and more open to my expenses, means खुल के expenses और liabilities को we should record कि अच्छा हमें गलती से भी लगता है कि ये expense आने वाला, we should record it. That organization sustains, that organization grows if we are having A to Z dots of my expenses and liabilities. And those revenues, those assets which are not certain, which are uncertain, we should avoid recording them. Record expenses and liabilities even if they are uncertain. This is the point. Even if the expenses and liabilities are uncertain, record them. Do not record revenues and assets if they are uncertain. Right? Very clear. However, this principle recognizes revenues and assets when there is an assurance of its receivable. मतलब जब तक revenue पे ठप्पा नहीं लगता, do not record it. And record expenses and liabilities even if there is not assurance of them being occurred, right? Incurred. As per this rule, one should record inventory at a lower end of its current market value or its acquisition cost. So it is ये तो जो conservatism principle, एक तो है revenue assets और expenses liabilities related. दूसरा प्रिंसिपल कहाँ है अप्लाई हो रहा है? इन्वेंट्री में. व्हेन आई एम हैविंग माय क्लोजिंग स्टॉक, आई शुड वैल्यू इट एट अ लोअर price as compared to my market value, or I should record it at its acquisition cost. Why this is to be done? This is to be done just to underestimate my profits. Never overestimate. The company which overestimate the profits never succeeds. क्योंकि वो हवा में ही रह रही होती है कि I am having so many profits. Always overestimate your losses, your expenses. This means that. And underestimate your profits and incomes. So conservatism principle is very simple. Overestimate your expenses, underestimate your incomes. All clear?
Eda, I have a question over here.
Yes.
Does an accountant has a role to play for the decision making of any company, the directors of the company?
Yeah, the directors of the company actually they have board meeting, and in those board meetings only they discuss these things. Ki, how we are recording our accounting things, how we are recording our financial statements, how are they being prepared, with what
Okay.
principles, right? See, if the directors are not being told that they are doing these things, then
Hmm.
obviously it's in the hand of the director कि वो अपनी कंपनी को कैसे चला रहा है. अगर वो कहेगा नहीं नहीं ये लॉसेस नहीं दिखाओ, ये प्रॉफिट्स दिखा दो, अल्टीमेटली दिस हैपेंस कि शो
Hmm.
दिस इन नेक्स्ट क्वार्टर, शो दिस इन नेक्स्ट क्वार्टर, बट दिस इज रॉन्ग. यू आर like overestimating your progress. And if
So
you're
do you
yeah,
do you say here that the accountant should be biased or unbiased in judging
accountant
the
should be
portfolio for
unbiased.
the company?
If he is biased, he is not good for the company then. He is doing his job कि अच्छा मैंने प्रॉफिट्स दिखा दिए, मतलब मेरे को तो अपने पैसे निकाल के लेके जाने हैं, बट कुछ टाइम बाद जब when company will fail, everyone will hold his गला कि
Hmm.
how did you do this? He should be unbiased. Then only he should show the true picture to the director, to the CEO of the company that we are facing this. Now tell what to do, how to improve the profits. वो तो फिर
Okay.
फाइनेंशियल टीम, मार्केटिंग टीम, वो सब आएगा कि हम कहाँ अपने प्रॉफिट्स और ये सब कहाँ रिकवर करें, क्या नया प्रोडक्ट लाएं, how to cut on the cost, how to increase the price, and how to increase basically the profit margin. Cost cutting per price करना है या overall करनी है, ये तो they have to decide together. But
So you're
accountants,
telling so you're telling he should be a important asset in the decision making of the company. He
yes,
should give his inputs.
of course, of course.
Okay.
It is his role. Ultimately क्या हो रहा है, but वो क्या record कर रहा है, the statements accountant is recording is shown to everyone ना. अगर चाहे वो
Hmm.
इंटरनेशनल मार्केट में जा रही है, चाहे कहीं पे क्रॉस बॉर्डर मीटिंग्स में रिपोर्ट्स जा रही है, फाइनेंशियल स्टेटमेंट्स ही देगा हाउ द कंपनी इज प्रोग्रेसिंग. what is being prepared and written and stamped by accountant, ultimately वही जा रहा है, चाहे पीछे कंपनी में कुछ भी हो रहा है. So he has the
Okay.
role, a good role. But yes, if he is being biased to his role, then it is no use. मतलब फिर ultimately he is like not doing his right job. He's
Okay.
following the ethics basically.
Sure.
Third principle, we will be moving to next principle. Cost principle, historical cost. Historical cost means the cost price at which we are acquiring that asset. Why we say historical? Be, for example, if I have purchased certain machinery and it is like 10 years back, so it is like historical cost, right? So cost principle means whenever a business acquires an asset, its initial value is recorded in its financial reports of the business. This value might not be improved in the market value of inflation. It is also not updated to reflect any depreciation or even appreciation. This value is known as the cost principle. So cost principle has its drawbacks, but cost principle means recording the asset at its historical price. And what are the drawbacks? We are not talking about any inflation. अगर overall year में उस मशीनरी की प्राइस बढ़ गई है, हम वो चीज रिकॉर्ड नहीं कर पा रहे. डेप्रिसिएशन हम हिस्टोरिकल कॉस्ट पे ही लगा रहे हैं और वो स्क्रैप भी बन चुकी है नहीं बन चुकी. So there are many drawbacks related to this principle, but this principle basically means recording the asset at its acquired price at historical cost. And the problems are we are not taking into account the depreciation, inflation. So this is the cost principle. Next is economic entity principle. This principle is a basic of accounting that requires businesses to be treated as a separate financial and legal entity, right? Economic entity principle means treat business as a separate entity. We have learned in company law that it's a separate legal entity. I would say it's not only a separate legal entity, it's a separate economic entity too. जो भी records हैं, जो भी money आ रही है, जो भी पैसा जा रहा है, it is in the name of the company. It is not for any one person. It is not in the name of director or CEO. It is to be done in the company's name. So treat company as a separate legal but economic also. Economic entity is also separate. This principle says that business is to be treated as separate financial entity. This means that the recorded activities of the business entity must be kept separate from the recorded activities of the owner and other entities. Right? Recorded activities of the business and owner should be kept separate means, for example, if the owner is buying if the owner is buying a car and it is being shown in the company's name that the car, actually we all of us know that this happens everywhere, that many things are bought in company's name, right? So this should not be done by the owner also. He will not be able to estimate the true value of the company, right? So this means that they should record activity separately, the owner and the company. These may also include either a sole trader, limited liability partnership, or general partnership. So these are the these are the examples of the separate economic entities. Whether it's a sole trader, sole trader means a sole person running a company. Limited liability partnership means few partners entering into an agreement with a limited liability agreement. Limited liability means everyone has limited liability to their extent of investment. Or general partnership. General partnership means unlimited liability. So economic and legal entity is separate and owners should be kept separate. This is the economic entity principle. Matching principle. Now, again, like accrual, this is, I think, the second most principle which we have to kept in mind while recording the financial transactions. It states that companies must report their expenses and revenues simultaneously, right? I repeat, companies must report their expenses and revenues simultaneously. The revenues and expenses are matched on income statement for a specific time period. That specific time period is usually 1 year. It is a part of the accrual accounting method that provides an accurate representation of operations on the income statement. Right? So matching principle means if you're incurring expense and you're getting revenue for that, that is kind of matching principle, matching revenue with the expense incurred regarding that, right? This principle is quite useful for investors as investors can match revenue and expenses to get a better sense of the finances of a business. मतलब अगर मैंने आज ये expense incur किया है, for example, I've purchased a good lot of raw materials in this quarter. How much and when we are getting revenue, whether I'm able to recover by selling all these finished products within the same quarter or in the next quarter or in the next financial year, that is called matching principle. So it states the companies must report the expenses and revenues simultaneously. Along with the income statement, there is a need to assess the cash flow statement as well. So we know income statements means profit and loss account and balance sheet. A cash flow statement is a separate where we only record how and when cash is coming and going. Cash flow statement only records incomes and outcomes of cash, right? So matching principle is simple. Record all revenues and expenses that is being incurred, that is being received side by side together, right? Now, next is materiality principle. I hope it's clear up to this point. The matching.
Yeah, hi, Era. Could you please explain cash flow in previous slide?
Okay. Cash flow statement. It's basically one of the financial statements. The main statements are profit and loss statement and balance sheet. Then there are other certain statements that we do prepare that are called cash flow statements. Cash flow statements, see, profit and loss में हम expenses और revenues report करते हैं, चाहे वो हमें receive हुए हैं या नहीं हुए. That accrual principle is being followed. But cash flow statement में हम क्या follow करते हैं? Whatever is being received this year, whatever is being spent this year, all that is recorded in cash flow statement. So cash flow statement is a basically different thing as compared to profit and loss. And cash flow statement basically shows the summary of cash. कि इस साल कितना cash आया and कितना cash गया. Finally, we have cash balance or not. This is the result of cash flow statement. Profit and loss statement shows how much profit we are incurring, we are having this year, right? That is not actual कि हमने जो receive हुआ है rupees में. It can be like to be received or yet to be received as per the accrual principle.
So it is necessary to maintain cash flow statement every year?
Yeah, these statements are prepared every year.
Okay.
Yeah. These cash flow statements. Then there is one more statement called fund flow statement, जिसमें cash के अलावा और जो other sources of funds होते हैं, right? So cash flow state main जो हम कई बार financial statements में कहते हैं ना, we say profit and loss, balance sheet. We hardly mention CFS, FFS, but yes, these are part of financial statements. Cash flow statement is to be prepared every year to see how much cash is coming and going. What is the flow of cash basically during the year? That is the purpose of preparing cash. Okay, so next is materiality principle. As per the materiality principle, any item that may impact the decision-making process of an investor must be recorded. Means what is material to the organization should be recorded, which can affect the investor's decision should be recorded. These details must be recorded in length in the financial statements using GAAP. Using GAAP means as per the accrual principle, matching principle. It is an important principle for deciding if a transaction should be recorded as a part of closing process. For example, if I'm buying some stationery items, hardly 10 rupees, should I record it? Is it material? Will it affect investor's decision? No, of course. Right. So certain items are put it as like they are recorded as petty expenses, and sometimes the basics are even missed out, right? The very small petty expenses. But if I'm saying if I'm buying computer machines and I'm not recording it in my financial statements, the investment in computers, the investment in maybe if I'm upgrading my system with AI, artificial intelligence, and I'm not showing it in my records, then it is creating a problem, right? Sometimes certain investments do affect investors' decision. कि अच्छा हमको लगेगा, oh, the company is upgrading, it's working with AI technology, right? They must be growing fast. अब वो आगे बढ़ेगी, अब वो और अच्छा grow करेगी. It will make more money, it will make more profits. They are upgrading. So certain material decisions should be mentioned in financial statements. Now, again, this is solely in the hands of the accountants. The biasness lies with the accountant. What is material and what is not material? No one will come and tell him. It is his decision to know this, to record this. So, and next is full disclosure principle. Full disclosure, it's a very simple principle, and as the name says, we are aware with the name itself, we should disclose each and everything. Each and everything means every petty expense, every small expense, every loss, every liability first, every revenue, certain revenue, not uncertain revenue, every certain income should be disclosed. So each piece of information should be included in the financial statement of an entity. It is important to only disclose information about events that have a material impact on the financial position of an entity. Those informations which have materiality, which are material in nature, those should be recorded and have full disclosure. As per this principle, it may also include those items that cannot be quantified. Means even like we say, na, the people are going on training. right? Though that training part is also important. We are showing that employees are being upgraded, they are getting more training on the particular software or this. So that's not a monetary thing, right? That's a qualitative thing. So those qualitative things, qualitative transactions, efforts by the companies should also be recorded in the statements. Businesses are also liable to report existing accounting policies and any changes in them as well. Right? So, how can we record the training of people? We can show it like a basic expense. So much expense was incurred on training of employees, and obviously, the results will be shown off in the profit when they will perform in the company. So, this is full disclosure. Record every transaction which is monetary, materialistic monetary, right? Not only monetary, materialistic monetary, and even qualitative, which is material. Means monetary and non-monetary both should be recorded, but that should be material in nature. That should be important from the companies and other stakeholders' point of view.
Good evening, ma'am.
Yes.
I have one question. If company planning to buy a machinery next year,
Yes.
it should be recorded in the GAAP.
No, if the company is planning to buy the machinery next year, so
For investment purpose, investor purpose.
yeah, so it has to be recorded when the expense is incurred. Maybe
Okay.
next year. Means uncertain, मतलब इतना uncertain expense भी हम इस साल नहीं record कर सकते as per GAAP. But yes, obviously plannings should not be recorded. Planning of expenses should not be recorded. When the expense is incurred, that then in that financial year we should record that expense.
Okay, ma'am.
Right.
Hello.
Yes. Anyone else?
Yeah, very good evening, ma'am. Ma'am, actually, we have just learned that economic separate legal entity.
Yes.
Yeah, ma'am, in economic separate legal entity, we have learned that business is a separate legal entity in the eyes of law. And you have mentioned examples like sole proprietorship and limited liability partnership.
Right.
Yeah. So can we say NPO is also an economic separate legal entity?
Which
Non-profit.
which can you please repeat?
Ma'am, NPO, non-profit organization. Because ma'am, I have a doubt because in NPO that we have a name that we don't need to, we don't earn profits. We just work for the public welfare. So that's why I'm asked.
Yeah, see, अब NPOs का basically तो number one, we are not recording financial transactions for investment purpose. Or it depends how we are running the NPO. Obviously, when we are running the NPO, we can consider this fact that we are taking it as a separate entity. For example, a group of 4 friends has started a new NPO and they are planning it for the welfare of kids under 4 years ki jo bhi underprivileged hain and they are just born from the hospital and they need certain services, they should be given from these NPOs. Now, these 4 friends cannot say that I am buying something and investing something, it should be in my name. NPO के नाम पे ही वो separately होना चाहिए. So, separate entity should be there at that point also, right? But मतलब NPOs are not formed to earn profits. They are not non-profit organizations. So, the financial statements are just like कि उसमें हम क्या profits और losses देखेंगे कि इन्वेस्टमेंट हो रही है क्या पैसे आ रहे हैं कहाँ से आ रहे हैं हाँ बट यस देयर कैन बी रिकॉर्डिंग ऑफ ट्रांजैक्शन जस्ट टू सी फ्रॉम व्हाट सोर्सेज दे आर गेटिंग डोनेशंस just for the entity purpose, just for the record purpose. But yes, while preparing the transactions, it should be treated as a separate entity.
Yeah. Okay. Thank you.
Most welcome. So, going concern principle. Now, going concern principle means we are assuming the entity is never going to end. It has an unending life. So, according to this accounting principle, a company will complete its recent plans, meet its financial obligations, and use its existing assets. Through this principle, the company continues to make money to avoid going bankrupt. In case the company is unable to adopt this principle properly, the chance of liquidation and bankruptcy increases. Right? Now, we all know that there are stages of a company like this. right? It grows, reaches the maximum point and starts falling. Now, where the main, what we say, the main struggle of the company that lies in that growing part and the maturity part. This stage, the growing part and the maturity part, the company has to stretch this as long as possible. क्योंकि maturity अगर किसी company ने reach कर ली और falling stage पे आ गया, so death of the company is soon there, right? It can only be going concern, means it can have an unending life. Unending तो किसी की नहीं होती थी, कोई practically over the generations चलती है. बट कभी ना कभी बहुत ही रेयर वी नो कि कुछ स्वीट शॉप है या कुछ ऑर्गेनाइजेशंस हैं या फार्मास्यूटिकल्स कंपनी जो ऑन गोइंग है, right? But they have certain changes, acquisitions, mergers, they have ongoing these things, right? So that is why the growth and maturity stage is being elasticated, it's being stretched. But once the companies start falling, it is like difficult to raise it again. So going concern means we are just making the company to grow and do not reach the maturity stage as long as possible. And going concern can only be possible, number one, if the company is keep on earning the income, the profits. ऐसे कमाती रहेगी, then the company will never go bankrupt, right? And it can manage its investments, its expenses, its liabilities. So going concern concept is also known as the continuing concern concept. A company continues to be a going concern till the time the sale of the assets does not hamper its operations. And if I'm selling the asset, it's not because of that I need some money to meet my losses. It's just because that I am doing it for some welfare. Maybe I'm just updating the assets and selling my old assets. That should be the motive. If the company is no longer a continuing concern, it needs to start reporting specific information on financial statements, right? So if it has reached the maturity stage and if it's going to decline and end up soon, it should start. The accountant's role is to start giving hints on the financial statements for the betterment of stakeholders. The investors need this information. Whether if the company is going to short, why would anyone will keep money invested in shares in those companies? They would like to withdraw, and it is the duty of the company to inform this information on their financial statements to their stakeholders that they are winding up soon. To this principle, accountants can make decisions related to which information should be reported on financial statements, right? So this is going concern. We always assume, while the accountant always assume that the company is ongoing, will keep on earning money, and there is no liquidation of assets for wind, right? This is going concern principle. In case the company wants to wind up, the accountant should mention these things on the financial statements for the betterment of the stakeholders. We have covered enough principles. 1, 2, 3, 4, 5, 6, 7. So, okay. 1, 2, 3, 4, 5. 5 principles we will continue tomorrow in the next class. Any doubts related to the present class?
Yeah, you have been very good in the classes. In the class, I think the team don't have any questions as of now. So maybe in the next class they will have more questions. Being inaugural session, they were not also prepared for this. All right then.
Right.
Yeah. Thank you.
Thank you, everyone.
Thanks.
Hope to see you tomorrow.
Yeah.